Hello everybody, it's Justine Pollard here again, and I've recorded a video for this month's December newsletter. It's going to give you an update of the current market action since my last newsletter to you, and also share with you where my current trade is and some new trades that I've opened since my last newsletter to you. Now before I get started, I just need to do my usual housekeeping and remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I share are for illustrative purposes only, and I am just showing you how I view the current market, and I'm sharing this with you. So first of all, what I want to show you is a chart of the ASX 200 market. Because I predominantly trade the Australian market, this is the prime index that I look at. So since my last newsletter to you, which was around the 14th of November, the ASX 200 had been falling in a downward channel line, and then it had bounced and broken above this channel line and was zigzagging around, getting some support here at this 4150 level and bouncing up near an old resistance point that it's had from the past. But lo and behold, after my last video to you, it actually collapsed through support and made another lower low and was starting to head down to the lows that it's made of the past. But it was very short-lived before it had a huge rise up and has pretty much shot back up to the levels of where it was when I last left you. So it has certainly been a turbulent ride since my last newsletter to you, which was probably about 3 weeks ago now. So I've had a very sharp fall followed by a very sharp rise. Now the sort of trading in this kind of market can be very difficult because you'll be facing one direction, you might be long, and then you get stopped out. Then you go short. I had a couple of short trades through this period here, and then I was taken out. My aggressive stop loss strategy took me out of those trades, and then I found myself long again. So it is a frustrating time to be trading, and at the moment my trades have been minimal for very good reason, because I haven't been hanging on to them long enough to actually build into a good series of trades, because we're not in a trend that's been carrying on for a longer period of time. We're zigzagging around. So let's also go to the weekly chart and have a quick look at what the market's been doing over the weekly chart. And at the moment that 30-week moving average line is still falling and the share price is still below it. So we are currently having a rise back up to that 30-week moving average line, but it's still looking unhealthy on this chart. For it to become healthy, it needs to go back above this 30-week moving average line, and it needs to move back above this resistance area. So it's going to be interesting to see what pans out, especially after we've had a very sharp rise and we're starting to head back up to this resistance area. And that is also giving me signs to be vigilant on the trades that I do have open. So let's now have a look at the US major index, which is the S&P 500. This is a daily chart, and you can see since my last newsletter, this share had sort of been building up into a bit of a triangle pattern. It was about this point. It actually broke through the bottom of its triangle pattern and fell very sharply in a very short space of time. Now it didn't get down to the lows of its past, and it had a rebound within. Look at the rebound. I mean, beautiful long candle, had a bit of a breather, and then shot up again. I mean, 3 days it has recovered from those falls over there, which took 1, 2, 3, 4, 5, 6, 7 days, and it recovered that in 3 days. So this really confirms to you the volatility that's in the market. And there's lots of things that have been going on economically out there with many countries around the world, and this has really been driving that volatility into the market. But the charts always show you that story as well. Now last newsletter I presented a trade to you, so I'm just going to open up that chart now. This trade, which I can now disclose to you, is Caltex. Now I opened this trade on the 6th of October at $12.08 when it came up in my trading system. So when you see a blue arrow on the chart, that means that when I ran a scan on the market on that day, that particular share came up in the report. And this is how quick and easy it is for me to run a scan. I pretty much select it and then I run it across the ASX 300 stocks. And whatever comes up in the report is what I'm interested in. So this particular share came up in that report on the 6th of October. Now I stayed with that share and it rose very strongly, and so did my trailing stop loss. This is my trailing stop loss line underneath the chart of the share. It paused around this level here, just below $13, and then it rose up again, and so did my stop loss. Then it fell back, then it rose up, and it fell back. I was getting very nice support around this level here. But it did start to build up a descending triangle pattern, which is where you've got a downsloping line building up with a support level. And eventually it's going to make or break one of those points. Now you could have said, well, why didn't I take profits in here because I saw this pattern building up? Well, I didn't know if it was going to break through support or it was going to go up higher, and I still didn't know what the market was going to do and what it's going to do every day. I didn't have any other clear reason to actually exit. I usually look for support and resistance lines and then bounces and rejections off those levels. So I didn't see this line building up till this had occurred over here. And then I thought, I'm happy to stay with it and see if it bounces off this support line, and if it does, I will stay with the trade. If it breaks through, my stop loss is just sitting below it and I will be taken out of the trade. And that's exactly what happened on the 22nd of November, and I was taken out of the trade at $12.68. So I took a very small profit of 4.8% on the total trade size and 48% on the margin, because this was a CFD trade, and I held this trade for a total of 47 days. So once again, small profit, because all this market has been presenting is small profits and small losses. But I have had a run of some nice small profits lately. I do love it when I get on the bigger winners, but there just hasn't been those big winners out there at the moment. So since then, as you saw after I left you, the market had a big fall. So I did have a couple of positions on the short side, and this is one of those trades which I'll show you. I'll just close this down. This is a trade here of Flight Centre. Now this share had been getting resistance at $20. Resistance here, resistance here. The last time it got up near $20, it fell all the way down to $16. Now it had now recovered all the way back up to $20. It had broken this short-term trend line that I've drawn on the chart, and it broke through with this red candle here and an arrow, which meant that it came up in my trading system. I liked what I saw and I short sold it. So I short sold it on this day here on the 21st of November at $19.37. And this is when the Australian market was starting to have its fall. So I short sold it. It fell down to this point of $18 here, and my stop loss had fallen as well. But then it started to bounce up. And on the 28th of November, that was when we had that sharp rise in the ASX. And that was also when I started to take on some new long trades. So I found myself actually starting to build back into some long trades because the market was providing a very good bounce and I was presented with some opportunities. I did hold this trade for an extra day, and then on the 29th of November, when it had this bounce up and it was clear that it was getting support from $18, I aggressively exited this trade with my aggressive exit strategy. And this is something that I shared with my mastermind members back over a year ago, that when we're in this sideways market, I have an aggressive exit strategy that I employ. And that allows me to get out before my stop loss is hit. I do love trending markets and I do like leaving things to run in my stop, but in this market I've been finding that if there is a clear bounce off some sort of support or resistance, then you exit the trade and you just take some profits. If it fails and it falls back below this level, you get back in there again. So I did aggressively exit that one, and this is a very good example to show you the difference with two trades. Caltex was one that I left my trade run to its stop loss because I was comfortable with it bouncing off support and I was long on that trade. This is one that I aggressively exited because I was short this one. It was clearly bouncing off support and my view of the market had changed again because I was starting to open up some long trades. So I only held this trade for a total of 8 days, and once again, very small profit. Made 2.4% on the total trade size and 24% on the margin of the CFD trade, because it was a 10% outlay. So since this bounce has occurred, I have moved into a couple of long trades. Like I said, I'm just opening a couple and then things change. So you do have to be vigilant all the time in this current market. So let me show you two trades that I have currently open and running. Just going to close this down. Okay, so here's a share. I entered 2 trades on the 28th of November, and these were 2 trades that had beautiful bounces off previous support levels and were doing it again. This particular share had built up support around this line here, and the last time it got to this level, which was about 1860, it rose up to as high as 2250. It had now fallen back away again down to this support level, and it was bouncing up with a nice white candle. I entered in, and it's really taken off now. Now, I'm keeping a very close eye on this, and a very close eye on this next resistance point, which goes back in the chart's history. And if it does get back up to this level and it does show signs of reversing, then I'm going to take profits out of this trade. I also have on the chart my trailing stop loss, which I haven't put on the chart, and I will continue to trail a stop loss on the trade as well, which is currently in profit because I entered over here and the stop loss is sitting here. But because this is what I call a channel trade, I'm going to keep that stop loss tight, and I will tighten that up as the trade continues to progress. And the share has gapped very strongly. So I've tightened my stop loss up to this level to just below the gap line and just below the round number of $20. So the other trade that I also took on this same day, I'll just close this out, is this trade here. Now, very similar trade. These were all channel trades, and they're all taken. I have 10 shares that I look at regularly, and if I see a chart pattern build up in them, I will take them. So these are strategies that I use in sideways markets. And about a year and a half ago, I ran a specific mastermind call to all my mastermind members, all on how to trade sideways markets. And this is like a channel trading strategy. So this share here had fallen to support just below $34, touch here, touch here. The last time it did this, it moved all the way back up near $39, and it's managed to get resistance there just recently again, and now it's collapsed back down to this $34. So on the 28th of the 11th, when I had to scan through these 10 stocks and I could see this one bouncing up, looking identical to the previous chart that I had opened, I entered into this trade on that day at $34.78. It didn't do a whole lot, but it has since charged up with a very strong gap, just like the other trade that I have open. And I've got a trailing stop loss, which I'll just put on this chart now, that's just sitting below this gap area here. Ideally, I'd like to see this share hold the gap and continue to trade above it. And as it approaches this resistance area, if it starts to show some reversal signs, then I'll take my profits out of this trade. But once again, I don't know what this market's going to do tomorrow, and so on. So it's just a matter of trading each day with what the market is presenting. And if the channel is going to continue, then that is what could possibly happen, and that is how I will trade it. And I'll give you an update on how these 2 trades go in my next newsletter, which will probably be around mid-January. In the meantime, I've got Christmas just around the corner, so if you are looking for a fantastic Christmas present and you've got a family or a friend that's a trader or interested in trading, or maybe a present for yourself, then check out my book Smart Trading Plans. It's a step-by-step guide to developing a trading plan, and it was listed as one of the top 10 best-selling books by Money Magazine back in 2010. And I've got a $10 discount on this book, so you can pick it up for $22.95 until the end of December, plus free postage. And that's free postage within Australia. There is a little bit extra if you are overseas. And if you're looking for another good book as a present, then check out Miss Millionaire. It includes 16 Aussie girls' stories, and that's available also at a $10 discount from my website for $19.95 plus free postage within Australia. So get on over to my website www.smarttrading.com.au and you can pick those books up at the $10 discount. In the meantime, if you want to know more about my trading systems, then I suggest checking out the Smart Trading Plan and System Development online course. This course comes with my Smart Trading Plan template, 11 audio sessions that I've personally recorded, comprehensive course notes, supporting videos with every session where you can watch videos of me showing you how I do what I've been teaching in that particular session, and you get all the codes to my trading systems. So I'm pretty much teaching you my trading plan. And the cost of this course will be rising as of the 31st of January. So you can lock in a payment plan now and get started in the holidays and start fresh in the new year with a clear and concise trading plan. So you can buy this course on its own, or you can purchase it in a training pack. So there's the Deluxe Smart Trading Pack, which includes the Smart Trading Plan and System Development course. It also includes my Smart Trader spreadsheet, which is the spreadsheet I use to track and manage my trades, plus a Metastock training video course, which is where I teach you how to get Metastock completely set up if you are using Metastock or thinking of buying Metastock, plus access to my Smart Traders Mastermind. And this course is only $400 more, and you get all those extra inclusions. So you can lock in a payment plan on that one now before the price rises on the 31st of January. There's also the Ultimate Smart Training Pack, where you get my Smart Technical Analysis Home Study course. So if technical analysis is new to you, get a copy of that. You also get my main Smart Trading Plan and System Development online course, plus the Smart Trader spreadsheet, plus the Metastock training course, plus access to the Mastermind membership, which is my support program for all my clients. And I've got my next webinar with my clients coming up on the 21st of December. And then you have 4 hours of personal mentoring with me included in that pack. So the Deluxe and Ultimate packs are very good value, and they both have payment plans available. And if you want more information, head over to my website, smarttrading.com.au, and you can also download your free special report. I'd like to take this opportunity now to wish you a very Merry Christmas and a Happy New Year. And take some time out. If you're not going to be around over this period, stop trading and take a break. The market does usually go quiet, and the volumes do usually drop off. So you have to decide as a trader what you usually do around this period, and that's something that you would also have included in your trading plan. And if you do have any questions, feel free to contact me. All my contact details are included on the Contact Us area of my website. So goodbye for now.